Good evening. I'm Boyd Benavides, President of IRFC PH, welcoming everyone to the start of Season 4 of our RFC Tuesday podcast. Together with me this season, our mainstay Kuya Ryan Diaz, and our new co-anchor, Andre Obieres. So Season 4's theme is creating a resilient investment portfolio. What has happened to us in the past 2 years? Are we going to let the changing seasons affect our investment portfolio? These may be the questions we ought to have answered by the end of today's podcast. What should be our playbook in investing in times of uncertainty? This Season 4, the RFC Tuesday podcast will look into different asset classes and methodologies to ensure resiliency when uncertainties like the Black Swan event that hit us from left field. This season will be very exciting and informative for all RFCs who want to expand their knowledge on investments, both on planning, selecting, and managing. So let's keep ourselves glued to this FB channel so we don't miss any of this season's episode.
Thank you, Sir Boyet. This show is powered by IARFC-PH, the Philippine chapter of the International Association of Registered Financial Consultants. IARFC-PH is an association dedicated to the craft of financial consulting. The association is the sole organization authorized to conduct the RFC conversion courses as well as continuing education in the field of financial consulting.
So tonight we are your hosts. I'm Boyd Benavides, a registered financial consultant and a certified trust professional.
I am Kuya Ryan Daes, a registered financial consultant, a chartered wealth manager, and a registered estate planner.
And I'm Andre Michael Obieres, a registered financial consultant and an equity portfolio manager.
Good evening again, everyone. I would just like to remind all of us, all of you, to please send in your questions for the next episode so that we can expound further on these things that you are inquiring about. And I do want to remind everyone that all of our episodes are shown every second and fourth week of the month. By the way, let's acknowledge the talent behind the video magic of our episode for tonight. And for the rest of the season, which is done by our official video editor, Mr. Bong Escobar. Round of applause. For those in need of professional video editing services, you may get in touch with him through 0933-814-0272 or via bongescobar2000@gmail.com.
Yeah, talking about video recording, if you actually wish to view our previous episodes, if you want to listen about what we talked about in Season 1 or Season 2 or our foreign guests in Season 3, you can actually take a look at them. And of course, please share them with with other RFC colleagues. You will find them in the IARFC PH Facebook page. Let's get on with the show, Kuya Ryan.
Medyo juicy yung topic natin for tonight because many people were definitely affected by many people's investment portfolio were affected during the COVID-19 pandemic, which is still ongoing. So what went on before 2020? I remember in 2019, everybody was very happy because the train law was implemented. But lo and behold, excessive inflation rate crept in, di ba? Nauso noon yung social media posts wherein people would post magkano yung gulay na binibili nila. I remember siling labuyo, if you buy 1 kilo, it's worth 1,000 pesos. So minsan may mga karinderya pa nun, hindi na sila nagbibigay ng libreng sili. Which is usual, di ba? Which is what most Filipinos like when we're eating. May konting anghang, di ba? kahit isang piraso hindi maipamigay sa mahal ng sili back then. So interest rates, of course, naturally went up to control inflation rate. And then, pagdating ng 2020, syempre, hopes were high because, yan, magandang number yung 2020. I remember a term in wedding, yung pompiang, di ba? Yung sa drums, di ba? Pompiang. Kasi 2020, di ba? So, and inflation was going down already. So, of course, we're expecting that interest rates were going down already. And that's good for businesses, especially for the growth stocks that are, or even those companies that are part of the PSEI. And after coming from a low stock index, di ba, we went as high as 9,000 tapos sumadsat ulit to an all-time low. Magkano ba yung stock index natin noon, Andre? Naalala niyo ba yon, Sir Boyet? Andre, yung
Yeah. I actually remember in early 2020, we were actually starting to recover. The prices actually dipped in 2019, like you said, because of the high inflation numbers. But in 2020, at the early part of the year, we were actually a lot more optimistic. And you would actually see it reflected in the PSEI index, where the prices were actually jumping back from the 6,500 level to the 8,000 level, and to the point that there were even many broker dealers and analysts were already talking, the market's going to test 9,000 again, and yeah, it was actually an optimistic time until the pandemic hit us. It was a surprise. And talking about that, it actually makes us think, what were the overall effects of the pandemic, not just to the people, but the country, the economy, and also our investments. If you think about it, the pandemic has truly become a crisis of an unprecedented crisis of our generation, right? Worldwide, there have been millions of deaths, unfortunately. And in the Philippines, COVID-19 has claimed over 55,000 lives, right? To us, it looks like a statistic, but talk to anyone who has, who lost someone, and it's a difficult conversation, and the pain is still there. I actually personally know someone who lost her son because of COVID. Nobody expected it because he was a young guy, right? He was very fit, very healthy, but the pandemic actually is an unprecedented crisis on the health side and also the economic side. But before I talk about that, I remember seeing when it was early, when the early days of the pandemic, there were so many, the lines at the hospital were so long. You would even see it in social media sites like Reddit, that people were taking pictures outside of Chongwa Hospital, and the line was so long. Yeah, it would stretch, and just trying to even go to the triage or the ER, it would take you a long time of waiting. That there were even some people who unfortunately perished because of the long lines, and the hospitals were overwhelmed, right? And
I
not
remember
only
people dying in the line.
yeah, exactly. That's my point, right? There were people who actually died while lining up, and not only do you see these kinds of congestions on the hospital level, there were also on panic buying on the streets, right? Grocery stores were, the lines at the grocery stores were so long. People were rushing to buy basic necessities. You'd even see media or media journalist articles showing that people were buying tissue paper left and right because, well, we don't have
tissue paper.
yeah, abroad, right? We may not have that similar problem locally because we have a different approach. But anyway, I don't want to talk about that. But you can see that it was a crisis that spanned from the health side to the economic side, and that also led to the markets. If you would look at the PSEI chart, you would see that there was a steep drop, right, from around the 7,000 level to around 4,000. It's a price level I haven't seen since 2012, and that was fresh out of college. So it was a big shock. Um, and the thing is, not only did it change, um, like the outlook, people have become more uh, conservative with with how they manage. They're people are more willing to do social distancing. We wear masks all the time. People took the health issue more seriously, and that is a positive change. And you'd also see some major secular changes outside of the health side. The rise of the remote working and schooling. People have become used to the idea of working from home, and with the advent of Zoom and other video conferencing technologies, it has become a lot easier for people to work remotely. And this has also had some implications on the commercial real estate. You'll see a lot more vacancies. Uh, right now, I'm in my office. I see fewer people in the building. Before, the parking spaces would be so full. Now it's practically empty. You don't even need to reserve a slot to get parking. And there's a view that this remote working trend is likely to continue going forward. There are a lot of jobs locally, or especially white collar software related jobs that can work anywhere, and many of them are likely to stay or choose jobs like that, and that will change the job market. And this will have a tremendous impact on how real estate and how just the future of work will go. There's also some interesting changes with the stimulus checks in the U.S. and other countries in the world. You would actually see the growth of retail trading. This is something that nobody expected. With people, more people at home, spending time at home, and stimulus checks coming in from the government, people are now more willing to trade. A lot of people became DIY investors and putting their money in the market, and that actually resulted in uh, stocks, in the U.S. stocks pushing to new record highs, right? And that's an interesting thing because with more retail participation, it opened the doors, for everyone to actually, uh, take their finances, on their own hands. But that's in the overseas side. I think it would be an interesting point to look at the local market. Do you have something to share, Sir Boyet?
On the local market, on the local investment side, no, our markets remain very liquid due to fear. People were basically just holding on to cash, um, not not really investing in anything. A lot of people kept uh, money in either bank deposits or very liquid money market investments. The well, one is fear. Second is low interest rates. Um, Despite the very low interest rates, investors preferred government securities as investments. So during this period, the BSP and the Republic of the Philippines were the biggest borrowers. This also led to a very strong peso, but this strong peso was artificial because there was no demand for imports. OFW remittances actually increased during this period because of more assistance to their families back home here, and the returning OFWs also spend a lot for testing and quarantine facilities. So their extended stay added more to the coffers, to the foreign currency coffers of the national government. What's very interesting is that uh, we were thrust into the digital economy by need because of our situation. So it gave rise to electronic transfers, to electronic wallets, to using digital means for transacting. So we have the digital economy and the underground digital economy growing by leaps and bounds. But of course, BIR came in and started taxing online sellers and influencers. So the market was generally sideways due to uncertainties on the lockdowns, but there was heightened volatility because we don't know when the pandemic would end, when the vaccinations will be completed, when the boosters will be completed, when the virus would basically disappear. So nobody knew. Um, and a lot of companies took advantage of this opportunity, the low interest rate environment, to raise capital. So during this period, we had a lot of bond offerings, we had a lot of preferred shares, we had common shares being issued in the market. So there was basically still investment opportunities even in this um, pandemic situation. So for clients who were able to come in, um, um, well, as they say, when you see blood in the streets, that's the time that you have to enter the market. So those who were not faint of heart and took it as an opportunity to start investing, that was a good call. And hopefully those investments would pay back as the market start going up and ramping up back to the 9,000, 10,000 levels. How about on your side, Andre?
Talking about that optimism, I agree, right? With with conditions improving, I think it's increasingly possible that uh, we can actually see the market moving past the 7,500 level, which it has been struggling over the past few days, right? For especially for those who are actively trading the Philippine markets, you'd see that the index has been trying to test the 7,500 level. And I think one of the issues is how how we can actually get out of this pandemic hump, right? Like, um, there's a lot of people are actually getting vaccinated. More and more people are actually get fully vaccinated now, and vaccination has also been opened up to the younger generation, right? Ages 5 to 11 recently, and
Mhm.
right, and with more vaccinations, that can actually make it more encouraging, right, for all of us to, uh, you know, go out more and then spend more, right? Especially for those who have been saving up a lot of money over the pandemic. I'm pretty sure a lot of people have done that because you don't have to spend for commuting, you don't have to spend for eating out expensive lunches. And an interesting point that I do want to share is that, like Sir Boyet mentioned earlier, that when the pandemic, there were opportunities in the pandemic when prices went down. I want to share a chart with everyone where you know when the pandemic happened in especially in March 2020, you'd see that everything went down.
Mhm.
Like everything from all asset classes,
All
from
asset classes. Right?
yeah, all asset classes. You'd think, oh wait, maybe I could buy gold because that's a good hedge, against risk, blah blah blah, or I could buy treasuries. Everything went down because everybody was scared, right? And when that happens, like blood on the streets, right? All asset prices went down from stocks, uh, gold, real estate. Even real estate went down
Even
when that
real estate
happened.
went down. Commodities
Yeah,
went down.
yeah, commodities went down.
Prices
Even
went.
even Bitcoin went down. And
Mhm.
if you were, you know, fully invested at the time, you would feel a lot of pain. But if you had extra money, that would have been a perfect opportunity to buy the dip, right? Because, like I said earlier, that was the only time that the index went down to 4,000, a price level we haven't seen since 2012. So for the astute investors or those who had extra money, and I'm sure you might have anecdotes, some clients who actually had enough money to buy when that happened. That's an opportune time to buy. You guys have any clients who actually bought during the collapse?
I have a few
Well,
clients
there,
who that
there were a few who started buying on March 17 and
Wow.
2019. That was the low point.
yeah. uh, I have clients who invested when the stock index short circuited. It stopped trading right a few days before March, before the lockdown was announced. And then I had some clients who invested up during the lockdown. Despite the stock market going sideways, they're still up right now. And then there are some clients who even earned 36% in a few weeks, in a few months, right after March. So, tama si Sir Boyet, for those who have the guts to do it, it's a payday for them. But of course, uh, hindsight is always 2020 vision, di ba? It's very
Correct.
2020 yung taon. Pero looking back, after markets recovering, uh, it was great to invest, but nobody invested. Very few people invested. But for those who did, it was a great reward for them.
Mhm. And they're still reaping the rewards now, even if there's volatility in the market.
Yeah, thanks for sharing your anecdotes, right? It it requires a lot of guts to buy when the market dips. And now that we've already passed that point, and with the pandemic getting long in the tooth, 2 years in running, and there's the possibility that it will be over soon. There are even some countries that have already, eased travel restrictions. There's even another country that has mentioned that they're no longer in the state of pandemic. So that begs the question: what's in store for us? What's the likely scenarios in the next few months? Sir Boyd, you have something to share about that?
Well, we're seeing the virus move from being a pandemic to endemic. So we're likely to see it just like the your regular flu virus, probably within the next 12 to 24 months. And as that happens, we'll see economies opening and restarting, especially the US. So there's expectation that interest rates in the US may rise to as much as 1% in 2022. But together with that, we have certain concerns like supply chain pressure that may push inflation higher. And of course, we see the tussle between US and Russia in the Ukrainian border as a major political influence that may push oil prices higher. But despite that, the expectation of higher interest rates, the monetary authorities, the local monetary authorities, still say that they have leeway to keep rates down so that it induces economic activity once our economy restarts. And we go through that exercise of balancing inflation with economic growth. So, with the local scenario, we see that bonds may be less attractive because of continued rates at a low level, but probably within the uh, 12-month to 24-month period, we will be catching up with higher interest rates, and stocks and alternatives will be preferred investments. Um, Again, those who went through when blood was on the streets will reap the rewards as our economy opens up and the global economy starts expanding again. Uh, but again, we will have certain um, political events like Russia and US in the Ukraine, and then we have US and China um, in in Taiwan, and in the Korean Peninsula as well. So these things we have to watch out for. On your side, Andre?
Yeah. First, I'd like to discuss about the interest rates, right? Um, I think it's interesting you pointed out that the BSP is taking a different direction with the U.S. Fed looking to raise rates around maybe 1% around the middle of the year. I think it's good that the BSP is taking a stance that is relevant to us locally instead of just following whatever the US is doing. Anyway, on that point, if the interest rates are going to go up, this does spell bad news for growth stocks. Because when interest rates are high, this makes it harder for them to grow. It does also change valuations for those who are familiar with how companies are valued. If the interest rate is much higher, it does have an effect on future cash flows, and that also affects the valuation of a growth company. And this is why you might see a lot of banking stocks doing well, which is kind of exciting because I'm looking forward to a certain bank IPO in the coming in the coming weeks. And it has also been good for the banking stocks. You would see a lot of the banking stocks lately going up. A lot of and a lot of cyclical stocks also doing well. Um, I do agree. I do share your concern with uh, the energy prices. With geopolitical tensions in Russia and Ukraine heating up, it does mean that we could see higher oil prices and further, bumps in inflation, which has become an issue, especially with COVID-19 causing
Mhm.
logistical or supply chain issues. That's why you might see, some products no longer available, or if they are available, they're pretty expensive. Um, Semiconductors have also been, in short supply for those who do crypto mining or gaming. You might see that, oh, video
Mhm.
cards are very expensive now. Uh, yeah, so I do agree with it. I do share these concerns, and I'm just you could say that I'm being cautiously optimistic. We have a lot of good quality companies that have been listed. In fact, in terms of asset classes, our REITs have done really
Oh,
well. Yeah,
yeah.
they've done really well, except for one REIT. And then we have an upcoming REIT which is focused on solar energy.
Solar
Our,
energy,
yeah,
yes.
Citicore. Pretty excited for that. And in terms of IPOs, you'd see that a lot of our IPOs have also, done well, fairly well. There were some that haven't, but for the most part, they have done well. So I think it would be safe to have a cautiously optimistic outlook. And I think today we actually talked a lot about, good materials, good content that would, give or enlighten our members. We touched what happened in the past uh, with how the pandemic has affected forecasts and how people have navigated the tough conditions on a financial basis and also on a day-to-day health basis. And I think it was also interesting that we actually talked about, what happened in the market, what happened to the markets during that time. With interest rates pumping up some stocks, more retail money flowing into the markets. There's also the rise of the digital economy, which is an interesting, side effect, right? It has become more convenient to bank, and I'm actually pretty happy about that. Before,
Yeah.
it was hard to wire money to, you had to go to the branch to get that done. Now you can just, just a click of a button, you can send money, you can make transactions. There are even banks who do online checks, right? And I think
Yeah,
it's
you
great.
can deposit checks
Well,
through your app, through your mobile app.
so I agree, right? From something dark and difficult, there's a lot of good things that came out, right? A lot of positives, lots of opportunities, and this does this is an
Mhm.
interesting point on our next episode, right? Because the COVID-19, threw a monkey wrench through our plans. Um, a lot of asset classes collapsed, and I think this is going to be very interesting for our members who are closely following the show. We have a very special guest next episode, Mr. Jesse Picunco, CFA charter holder. He is the author of Portfolio Management for Private Wealth, an introduction to portfolio theory and practice. His book is basically going to teach us, practitioners how to actually apply uh, portfolio management theory, uh, on a real, real time, real basis, client to client basis. And if you're closely following our episodes, you would this episode will be aired on the fourth Tuesday of March. So stay tuned for that. Uh, Kuya Ryan, do you have some announcements you want to share?
We have announcements for our association. So we'll be holding the RFC public course on March and June of this year. So this coming March, it will be held on March 14, 16, 18, 19, 21, 23, 25, 26, 28, and April 1. So April Fool's Day, di ba? And those are all 12 days of solid financial consultancy training. That's why we call it a conversion course. You try to transition from being a seller to a consultant. On June, it will be held on June 6, 8, 10, 12, 13. Then on the 15th, 17th, 19th, and 20th. And then 22 and the 24th. Again, all 12 days, Mondays, Wednesdays, Fridays, and Saturdays. Course fee is now 35,000. And of course, for those past members who are just trying to get back on their feet and renewing their membership today or from this point forward, you may want to go through the RFC refresher course, which will be held on July 4, 5, 6, and 7 at 8 a.m. until 12 noon. The course fee for the refresher program is 13,000 pesos. Sir Boyet?
We would also invite all RFC graduates to renew their membership and enjoy the benefits of connecting and networking with a global community of RFCs through the irrfc.org website, the continuing education seminars and conferences, and of course, our RFC Tuesday podcast. For renewal information, please contact Ms. Arlene Baguyo at irrfcph@gmail.com or 0917-645-7846. So contact IARFCPH now for your membership renewals.
And so, for dear members, if you actually enjoyed this episode, our podcast episodes are shown every second and fourth Tuesday of the month. That is why it is so important to follow us on our Facebook page. Episodes are pre-recorded and broadcasted through Facebook Live. On behalf of our executive producer, Ms. Grace De Vera Escobar, this is the RFC Tuesday podcast saying, it is better to be
in the know than to be the last to know.